Okay, thank you everyone for joining today's discussion on a topic that is something which is very extremely relevant in the current setup. The entire insurance industry is experiencing a lot of macroeconomic headwinds, whether it is related to changes in demographics or the regulatory environment, or even the constant changes in how our customers are consuming any content, their purchasing decisions, etc. Given all of this, we are sitting at the cusp of change. So, which means the future of insurance distribution is going to undergo a seismic transition. So therefore, I'd like to start by going around the panel and asking each of you, what are the trends that you have been observing, and what are some of the trends that you foresee in the future?
Okay, all right, so first of all, good evening, thank you for having me here. I think insurance is actually going through a lot of transformation, and especially in the last 2.5 years, one of the key stakeholders. So for any business, there will be typically a regulator, a customer, a distributor, and then obviously the board, the insurer management, or maybe the management of the organization. If these 4 stakeholders are there, I think regulator has really, kind of rejigged this entire industry in last 2-3 years. And some of the key things which have happened, which will, which are shaping the industry and actually going to define it in future is, one is open architecture has come in, which essentially means that in a bank counter, you will have more than one insurers selling. And if you're not the best, your product is not the best, then somebody else will come and take that place. The other thing is that the products which used to be file and use and capped to only 5 products in a year at one point of time, now mostly are use and file, which essentially means that there is an unlimited supply of products, and therefore every insurer is kind of challenging each other to come up with more innovative products, which essentially is a win for the customer, but more disruption for the industry. Apart from that, there is a lot of focus coming in tier 2, tier 3 cities. I think most of the businesses which gets done is in tier 1 cities for most insurers. While we do a lot of sales in rural, but about 20% of it, but it has to go up. That is an unexploited area, and in times to come over there also, there's going to be a lot of focus. From customer standpoint, I think customer is common. Somebody in the morning also was saying that we order food from Swiggy. We are used to interacting with organizations where instant gratification is a given. And same is true for insurance. I think gone are the days when somebody will debate that more customers will come to us only when we issue policies instantaneously. I think that has become table stakes for insurers. So that is another thing from customer standpoint, and more work will happen in this area. And if you look at from insurer or maybe seller standpoint, I think the demand on productivity, and therefore a lot of initiatives in that area, just so that the entire machinery becomes far more productive and far more efficient, is something where efforts are going to go in. Tremendous amount of work is going to go in. And I think from seller standpoint, experience and on-the-go information availability along with transparency is something which seller is actually giving more marks to insurer, keeping commercials aside. But that is the most important thing, which when we speak with last mile sellers, they say that if you're doing your stuff well, then we love you. And future, I think future belongs to artificial intelligence. Everybody's been talking about it, Gen AI. I think embedding intelligence in everything we do, making things more meaningful, and taking the mundane tasks away from the seller, where a lot of time just goes in, kind of maybe for collecting documents, etc., leveraging India Stack, and enabling things on the go is something which I think is going to be the emerging near future, maybe 2.5 years down the line.
Thank you, Manish. Abhijit. What are your views?
Now, I'll kind of supplement what Manish said. See, we don't see a significant shift, at least for life insurance, and I would talk only about life insurance. Don't have any, thing to say of non-life or general insurance. Is that it would? Our belief is that it will continue to be a face-to-face kind of channel, and digital will be assisting the face-to-face channel, and increasingly more and more digital engagement of the distributor and the entire distribution channel is needed to meet the norms that customer demands and also what insurer demands. The pure online sales obviously will be higher than current levels, but we don't see that to be the dominant portion of the sales that in some lines of business we've seen online take over completely. In terms of assistance or digital will be there everywhere. First is to influence the customer. Already we are seeing that the digital ad spend in India has exceeded the TV ad spend. That has already happened, and that trend will only accelerate. So it starts right from there that, on what channel are you reaching out to prospective customers. Till the last mile, when you are doing the completion or actual servicing, how are we servicing the customer, which will be digital. So what we are seeing is, even with our network, where we are very widespread across the country, and all ticket size policies, from small ticket size to large ticket size policies, a lot of customer, and unlike a bank, it's a low touch product, right? You don't have to do too many servicing requirements for a life insurance policy. Even then, there is a huge number of customers who are doing self-service on an app developed by SBI Life, correct? Which to my mind was a surprise. I would have thought that, you need to pay renewal premium once a year. Why would you want to download an app for that, correct? Because for my own policy, I just said, SI hai, to you don't have to download that also. It automatically gets deducted from your credit card or your bank account, what have you given. But so that's what I'm saying. For training, for customer servicing, for onboarding, everywhere the digital influence or digital importance is going to only increase and not decrease. And largely digital will be mobile. I don't think, we give laptops and all, but I think increasingly going forward, I think people will use laptops only when they are, maybe 4 hours in a week or 6 hours in a week in office. Remaining time on the go, we will have to provide everything on the mobile. And so how do we ensure that it is available on the go? And that's why you can't send any long, complicated reports to them. So it has to be, snippet kind of input that needs to be given, and that is the way distribution will work forward. That's what I think.
Thank you, Abhijit, for your views. I think very interesting. I do see that you a strong belief that life insurance particularly will still continue to be in the phygital space than becoming completely digital, which perhaps is easier for general insurance, where we are selling small ticket size. Moving on. So, Manish, I recently read that Max Life is looking to increase its distribution footprint by hiring more agents. I think about 30,000 more, opening more offices. How do you, what is your strategy to perhaps train and retain such a large network, and how do you plan to leverage technology as a lever?
Okay, so the reality of our industry is that, like it or not, about the attrition in this agent fraternity is upward of 90%. So everybody is kind of used to, kind of trained large number of resources, because pretty much every year you end up rebuilding that entire cohort. But yeah, the scale has increased now. So what we do is, the way we approach this problem is that we look at agent in their cohorts. So there are, say, 4 cohorts, major cohorts, in which we take agents. It could be, and those are housewives, retiree, financial advisors, and 4th one would be self-employed. So now while the basic training obviously to get them in happens, but after that it is reasonable to assume and understand that the need of training for all these 4 cohorts is very different. So you won't tell a financial product what is a financial product to a guy who has already been doing financial advisory, right? So there the conversation is more going to be on insurance products. But for a housewife, maybe it is more relevant that you spend more time on financial literacy, financial products, and then insurance. And similarly for maybe a self-employed person, the training will be different. And for a retiree who just wants to be meaningfully engaged, the training has to be, how to open conversations, how to face rejections, how to, kind of have a conversation where you can have a conversation about the human life value, and you strike that conversation and sell insurance. So one, that kind of differentiation happens in terms of training these people. Post that, the vintage comes into play. So after the first 3 months, then depending on what is the vintage of agents, because some remain and some attrite, and then depending on vintage, depending on their segment, and then more variables start getting added into it. So for example, what kind of sale are you doing? How much, where are you comfortable? What kind of people are you selling to? And accordingly, the content is pushed out to them that kind of training should happen. So basically our aim is, and that's where the technology comes in, that you eventually would want to bring it to a point of n is equal to 1. Every individual is different, and therefore the training needs of every individual is different. And not only you push content which is most relevant for that person, it has to be bite-sized or maybe only of an optimum size, because there is so much content to consume. Everybody is short of time. If you push very large content to people, probably that will not get consumed. And so that is the second thing. And I think one of the most important thing is also that the constant reminder. See, when a person is actually getting into a sale, giving the most meaningful information to the person at that time is also, to our mind, is a very important part. So while I have trained somebody in a classroom, how much of that is retained and how much of that actually get used when it is actually needed. A quick reminder at that point of time when the person is actually getting into sale, we see that also as part of an extension of training, and that also kind of gets embedded, and that's where tech plays a huge part.
Abhijit, what's your point of view on what Manish just mentioned? Given the large network which SBI has, what are some of the challenges which you might have observed in hiring and retaining of such a large workforce, and how have you used technology as a lever?
So that, I think Manish said that the challenge of, retaining agents for long term remains for the whole industry. There are some companies who have done slightly better than us, but largely nobody is happy with the retention rate of the agents that we have. The challenge remains that full-time agents are not something which is an accepted profession in India in a very large way. LIC has some full-time agents, and some of us have some of the full-time agents, the larger companies at least, but that number is very few. Most of the people we have are part-timers. The challenge, some of the challenges, like say for example, when we say we want to encourage Gen AI into the advice that you want or the training content that we want to give. What actually happens is, say 85 or 90% of the agents are not very comfortable with English. Okay, and that's a reality when you go to especially outside. So you need to have that in local language. Now in English itself, there is a challenge of getting the right answers, checking and training the model again and again, and then you do Google Translate to convert a GI, but then there is a lot of loss. So converting a question or a problem statement into English, using some sort of technology to get the answer in English, converting back into the local language, and there are lots of missteps that happen. So to that extent, you have to go with canned stuff, correct? So you prepare something, and obviously it is customized to the need of the distributor. But the benefit of having a totally customizable, self-learn paced and all that, there are some challenges that you face. The second thing that actually also is a challenge for the non-agency force is that is, we are seeing that what partners perceive to be the integration limit. So for few partners, they are really open to having end-to-end integration for everything. But some partners are hesitant, at least with the insurers, to do full end-to-end integration of the entire chain. I'm not sure about what is the reason for apprehension, but that also limits, the capability that you can deliver to some of the partners. So some of those challenges are what we are facing, that the understanding level of wide distribution network is a little varied, and to get them to a good benchmark is something which is a constant struggle.
Very interesting again. I'm getting sort of different points of view from both of you. Another question, and this is for both of you. One of you can start. So, again, the network size is increasing. We have briefly touched upon how technology is playing a role in training, and N is equal to 1 sort of training. What is your view on reevaluating the entire distribution tech stack? So right from onboarding your agent and managing the entire life cycle to exit.
So it's tricky. So what has happened, at least till now, and we hope that we will be able to change it, we have gone, at least in SBI Life, I don't know about others, is some of the solutions that are available, look at that solution, see how it fits the SBI Life requirement, and then maybe do some modifications as required, and then implement it. We have not really done the deep shadowing of the true problem of the frontline sales guy. And I'm not saying, so what happens is there is an MIS related problem, there is an underwriting related problem, there is a prospecting related problem. So there are one. So for each of there is some solution that we have. It's not that we don't have a digital solution for it, but it is at the moment at least in patches. And I'm not very sure we are fully solving the problem of the frontline guy. And then the key remains that what you optimize for, correct? So that is a challenge which remains. So what has happened is, I think most head offices, it is how many policies got converted. 100 people gave you the money and say 95 got issued or whatever. That is one benchmark that is commonly used. Or what is the TAT for issuance of policy, that is a benchmark that is commonly used. I'm not sure whether they are, I don't have an answer for that, whether they are the right benchmarks to adopt. Because sometimes then you will use practices to optimize those benchmarks which may not be in the best interest of the customer or the seller. Correct? It may, I'm just saying this is hypothetical. We have not really, because we've done some work, but we are not very sure that it may be better that you take 4 days for issuance, but reduce the time in front of the customer so that you free the customer very quickly in 10 minutes instead of taking 30 minutes of the customer's time. And there are other means of getting, whatever documents or whatever you require in a very seamless manner without troubling the customer. Now, some of those issues have not been really thought through. And then, we'll have to rejig the whole process again. And now, lower last, because all this, digitization started about 7 or 8 years ago. Correct? Before that, pretty much it was physical forms.
Yes.
And then slowly everybody converted. And now, everything is so-called digital. But I think it is still largely, I'm not saying fully, it is changed. But it's still the physical process in mind which has got converted to digital with obviously interfaces with all the platforms that are available. Say, CIBIL platform that is available, IIB, or account aggregator. Those interfaces have been built, but the full, full optimization of the power available on a mobile is not getting used because we have not really thought through completely what is the problem we are trying to solve and what is the metric you want to optimize.
Great viewpoint. So what you're suggesting is that one of the reasons why we have not been able to optimize is that there is a problem of plenty in terms of the vectors that we need to optimize. Manish, your point of view on, have you reevaluated changing the entire distribution tech stack at Max Life?
Okay, so So I think I agree with Abhijit there that it is true for most of the people in industry that there are a lot of bespoke solutions we have implemented over a period of time because all of us have evolved over a period of time, and this digitization, especially in COVID time, when everybody kind of accelerated towards digitization, then a lot of bespoke solutions came in, and at this point of time, it is reasonable to say that from seller's point of view, the experience, because that seller is required to use so many assets to do the job, may not be optimum. So our approach to relook at that stack and how we are solving for it is that we are looking at it. If you divide it in layers, then the top layer is obviously the layer of engagement, where you are engaging with sellers. So over there, we are bringing in a single app so that we are able to create a single unanimous experience rather than a seller dealing with assets in silos. It becomes one unified experience. So that's our step forward in that direction. The other layer, if you look at it, is obviously data. Now in data, data is the new oil. Everybody says that, but it's important to kind of bring that all together, store it in a meaningful way. And when I'm saying store it in a meaningful way, now data is not only digital data which is coming in. There's a lot of dark data coming in. There are many forms of data which have started coming in because of these digital assets we have created. So bringing in all that data together and then meaningfully mine it is the second thing, and therefore your data lake house architecture has to be in place, and you've got to be really focused on it. So that's the other thing which we are focusing on. And then there has to be a very robust intelligence layer, our AI ML models, which are actually going to be sitting on top of that data and fuel intelligence into the system of engagement, so that when a seller is interacting with those applications, and vice seller, even when customers are interacting with our assets, it actually become more meaningful and more optimum transaction with them. So these are some steps we are taking to kind of, I would say, maybe solidify what we have.
Okay. When we were starting, we were talking about that we are living in the era of instant gratification. So from that, the question pops into my head. We can do our entire financial planning with the click of a few buttons, open a brokerage account, etc. Do you think somebody can become a distributor with just the click of a button? Do you see self-serve becoming a reality for distributors in the future?
See, I would, okay. So they will be much more self-serve than now. There is no doubt about that. More they will do on their go without the training room intervention, without their supervisor intervention. That proportion will increase. I am quite sure about that. But I think, still it is not easy for a new guy and to understand, new guy, even an experienced guy, to understand new concepts on their own, practice the pitches on their own, everything on their own. They will do, so there will be a combination of, some intervention from the supervisor or the training team or, whatever face-to-face assistance that the person requires. But more and more tools will be available so that, he doesn't have to ask somebody, no, I know this concept, but this one thing I have forgotten. So can somebody, so instead of, calling or, whatever else, it's just very quickly, I'm sure there will be. So self-serve will definitely be much more than current. I don't think it will be, at least in my view, completely self-serve.
Okay.
Manish, what's your point of view on this?
So I think broadly I agree with what he just said. I'll just maybe articulate it slightly differently. If you look at our business, there is e-com business where there is consumer intent and customer is actually coming in and purchasing, and then there is a sale which is an assisted sale, I would say, where there is a seller who is assisting, soliciting. So right now, e-com obviously is self-serve only. I mean, mostly done because there is a consumer intent, but that is a small portion of the overall premium income which is written in the entire industry. If you look at the other side, which is mostly seller-led, and that's where your question is, then if you divide the entire sales process into two parts, one is where the decision is being made.
Yes.
When you're telling someone, soliciting, genuinely establishing the need, and helping that customer make a decision. And the other part is where there is the process part, where the documents are being collected, maybe a medical is being done, maybe a financial underwriting is being done, and so on. I think first I'll talk about this side, where these documents and these operational tasks are being done. I think they will, radically change to the extent that it'll become table stakes that in about, say, 3-4 years, where everything is like fully done, leveraging India Stack. And a few days back, we had a workshop within our organization where we met with a few startups, and there was one startup which came up, and just by looking at a tablet for a minute, it tells you what your blood pressure is, what your heartbeat is, and they're claiming that they will get it approved by the healthcare authorities that it is valid. So now, if tech is moving in that direction, there is no point having so many people to kind of just do this manually. It'll all become automated. So that's where this portion will evolve. But speaking about the solicitation thing, honestly, so far in India, and at least in foreseeable future, nobody wakes up in the morning saying, "Aaj insurance kharidna hai." Okay, so I think it's, like it or not, reality is it's a push product. In the foreseeable future, I agree with Abhijit. It's likely to remain a push product, and this solicitation, this decision making, and the complexity embedded in the product, somebody will have to explain, and that's where I think the role of a distributor will remain, and hoping that only, customer will discover, understand everything on its own, and only through a click it'll happen. I think that's far away.
So you use the word far away. Let's fast forward to 2040.
My God.
Yeah? So how do you envision where a human will add most value in the entire customer journey? Do you think we would, 15 years from now, we would still be in the same situation, or with the changes which are happening in how we're consuming the content, changes in preferences of the customers, you envision a different customer journey?
Okay, that's a difficult question. Somebody in the morning also said that the cycles of changes are becoming very, very acute,
Yeah.
and very, very short. So it's very difficult to predict what's going to happen in 14 years from now. But I think Elon Musk says that in 2026, AI will become more powerful, more intelligent than a human. So if that happens, maybe the bots will be negotiating on our behalf. We'll not be doing that. But I'm just assuming we are in the play, and with that assumption, I'm answering. Even if that happens, I think solicitation, to my mind, is still one thing which most likely is going to be done by a human and will happen. However, what may change is that it may not only be an insurance solicitation. Then a seller will have to actually evolve to a financial advising, and it will be more of a holistic offer, which will be kind of given to a customer rather than only selling insurance, because then probably that'll not make sense. Not from the solicitation standpoint, from even customer standpoint also. You would want the complete portfolio to be in front of you, and there you are making choices. Even the journeys will evolve to a point where your insurances are more parametric insurance, maybe more customized insurance, maybe price for you will be different than price for me, not because of that macro segmentation, which is as of now that you're a female and I'm a male, and because that's why the prices are different. But most importantly, like how many steps do you walk in a day, and how many steps do I walk in a day, what kind of place I live in, and what kind of place do you live in, and what kind of lifestyle do you have, and what kind of lifestyle do I have, and so on. So those kind of granularities, etc., will also come into play. So that's the best guess. I've spoken a lot, so I'll just summarize 2-3 things. One, the products will evolve a lot, more personalized, more customized. 2, journeys will evolve a lot. It will be more holistic rather than pure insurance specific. And of course, forget the KYC and all that. That is a given. You don't have to do anything. Maybe maybe everything will be fully digitized and automated. And third thing is the solicitation from a seller standpoint. It will be more holistic, entire portfolio rather than restricted to one line of business.
Thank you, Manish. That was quite a crystal ball, I must say. So before we get into the Q&A, I have the final question for you, Abhijit. SBI Life is the largest private life insurer and pretty much been there, done everything that is out there, at least as of now. What is your one piece of advice for a new insurer who's building their distribution channel?
It's tricky. So you see what I think is important for any insurer or for any, for that matter, any financial services company is do something, which suits their DNA. So every company brings a strong point to the table, correct? So you will have to use your strong point and, re-emphasize and how do I say, strengthen it further. So I'll just give you a slightly different. Every insurer, it may not be appropriate to offer all product lines across whole of India. India is a complex geography. You try to offer all product lines for all geographies, it is going to be extremely difficult to implement it and complete. So you find a suitable, profitable niche, either it is geographic niche, customer segment niche, product niche. I mean, they have to figure out. And then, drive it in a very big way, deliver a far superior solution than anybody else is delivering on that space. Because if you specialize, I'm sure as a company you would. And then obviously that is where and then once you have done that well, then you can take a call whether, you would want to, expand horizontally, vertically, I mean, more product lines, more geographies, more distribution channels. That is how we will have to figure out. But, unless there is some person with very, very deep pockets, it's not easy to build distribution in India. That everybody has realized. So that pan-India, all product may not be the right way to go for a totally new insurer.
Thank you. Thank you, Abhijit. Thank you, Manish and Abhijit, once again for being such great panelists and sharing your insights. I would like to ask the audience if you have any questions for Manish and Abhijit.